Well, thank you everybody for joining us here today on the YouTube channel. We've got a great guest by the name of Alasdair Macleod. Alasdair's he's been around stocks, bonds, corporate finance since the 1970s. He's been covering that arena. He's been executive director of a mutual fund, also of an offshore bank. He's for 14 years, he was the head of research at Goldmoney. And that's really where I got to know you, Alasdair, is when you were working with Goldmoney and our friend James Turk. And just recently, you have broken off and you've set up MacleodFinance on the substack. And we're going to make sure people know how to reach you. But I just kind of want to pick your brain. I'm glad you joined us here from London to let me pick your brain for our clients. The first thing I want to dig into is the credit bubble. So, we see it all around us. This has been building for many, many years. It's the mother of all bubbles, and everybody's waiting for that pin to show up. What are your thoughts on the credit bubble currently, and where do you see that pin coming from?
Well, you're absolutely right to raise this topic, because I think it's actually the most important topic of the lot, and the one which is being completely ignored by policymakers. And for anyone who doubts how big this credit bubble is, bear in mind that debt is the other side of credit. So I would ask you, are we in a debt bubble? And I think most people would say yes, and how? Therefore, because debt equals credit, it's just the other side of the same thing. We're in a credit bubble. And you see this typically the sort of behavior of stocks at the top of a credit bubble is everybody ignores fundamentals and they're just going for momentum. And that, of course, has been the story of the Magnificent Seven and NASDAQ. And interestingly, this whole new stuff on the block called Bitcoin and associated inventions. They correlate actually pretty well with NASDAQ. This is the sort of thing. It's a modern form of tulipomania, if you like. Where something with absolutely hardly any presence at all gets bid up and bid up and bid up, and everybody has a belief in it. But basically, the real belief is that someone else is going to buy it at a higher price. So
yeah, it's the market where people buy. They buy art that's a banana taped to a wall and spend millions of dollars on it, right?
Absolutely, absolutely. So this is the mother of all bubbles. And as for that pin, I would just sort of take you back to 1929, when again we had a credit bubble. It wasn't as great as this one. It was, for the time, it was pretty great. We had the Roaring Twenties and the sort of behavior at the top of the New York stocks that we saw recently in the Magnificent Seven. How do you make money? You buy stocks, no question. Doesn't matter what you buy, just buy the damn thing. So that sort of attitude from the public. But you may recall, well, not recall, but you will have read in history that it was in 1930 that the Smoot-Hawley Tariff Act was brought in. And what's happening now? Smoot-Hawley Mark II. It's the combination of the two things which basically undermines the global economy like big time, and therefore at the same time, because of credit will be reallocated, if you like, away from stocks and things like that into safety or perceived safety. And that, of course, is short-term government debt. And so this means that the private sector is just having credit withdrawn from it. And it's going to, first of all, happen in the stocks. We learned that lesson from 1929. And then, of course, it will start undermining the companies, if you like, and particularly the corporations, which are overloaded with unproductive debt because they won't be able to refinance themselves. And of course, the other aspect of the credit bubble bursting is what happens to interest rates. Interest rates rise. Why do they rise? Because they reflect greater risk. And not only greater risk, but when the Fed comes in and decides to try and rescue everything because nobody's allowed to go bust, then what happens is that it devalues the currency. because the quantity of currency, if you like, from the Fed increases. It just gets chucked into the economy to support everything. Don't go bust, we'll write an open check for you, sort of thing. And what does that do to interest rates? Well, foreigners look at this and say, well, hold on a minute, the purchasing power of the dollar is not going to be so much tomorrow as it is today. On that basis, I need greater compensation if I'm going to continue to hold dollars. And then you look at the government finances, and they're in a debt trap. And the debt trap there, the way to look at whether a government is in a debt trap or not, is to look at whether the debt is growing at a more rapid rate than GDP. And if it's growing at a more rapid rate than GDP, then by definition, you're in a debt trap. So guess what?
Here
US
we
government
are.
in a debt trap. Britain's in a debt trap. France is in a debt trap. Italy's in the debt trap. Portugal's in a debt trap. Spain's in a debt trap. Oh, and I forgot, Japan is in a debt trap.
And what about China?
Uh, Not
Close,
quite so much. Not
close.
quite so much. The debt in China is more in the private sector.
Okay.
And I think the thing that's fascinating about China is that they have been accumulating gold, which is real money. I mean, gold is money, the rest is credit. This is what John Pierpont Morgan said back in 1912. And he's damn well right. And it's still true today, despite what the Fed will tell you. So basically, China has accumulated huge quantities of gold, which is not reflected in the central bank's reserves. It's additional to that. The people have also accumulated huge amounts of gold. And if you look at the withdrawals from the Shanghai Gold Exchange, we're looking at figures like 26,000 tons. I mean, this is not a trifling amount. And I wouldn't be surprised if the Chinese government has got 25, 30,000 tons tucked away. There is
Certainly
no
they have
doubt.
more than they're reporting, right? So
Oh, a hell of a lot more. Yeah. There is no doubt in my mind that the plan is to protect themselves from a collapse of Western currencies, which are fit, as we all know. And this is why central banks around the world are, selling dollars, selling euros.
yeah,
And
I was
what do
going
they
to talk
buy? They
about
buy
that.
real money. Yeah.
Yeah, I was going to talk about it. It's not just China, right? So we've
Yeah.
seen central banks now over the past 3 years bought over 1,000 metric tons of gold 3 years running, and that's
Yeah.
what 40 to 60% higher than any of the buying that they've done the 12 previous years, which they have been net buyers.
Yeah.
So I mean, it's massive amounts of gold, and just your thoughts on why they're doing that, because it's not just hedging against debt. I think there's some fears about weaponization, et cetera. What are your thoughts on the central banks and their balance sheets?
Yeah, well, I mean, the weaponization story really started as a result of the ill thought out sanctions,
Yeah.
swift sanctions against Russia.
Yep.
Russia responded and told everybody in its camp, look, this is what these guys in the West will do for you. If you got their dollars and you got their euros, they'll steal it, which of course is what happened.
Yep.
And he also said, and I'm going back to the St. Petersburg International Forum, which was 2022. The first year these sanctions and the SWIFT was cut off to Russia. And he said, and furthermore, if you've got any gold stored in Western vaults, get it out of there. Um, and they have been doing just that.
Yeah.
I have to tell you also, Rich, I mean, the
Can you
thing that's
blame them?
fascinating. Sorry?
Like, can you blame them?
And no, absolutely. And the thing that's fascinating is that this is a story which central banks are increasingly concerned about. I can't say who it is, but I've been asked to help advise an emerging nation on gold. They obviously they're sort of thinking, well, what actually, why should we be accumulating gold? Should we be accumulating gold? And if so, how much? And so, I will be going out to speak to them along with a couple of other, guys who understand the gold story. And it's just a sign that all this uncertainty, if you like, over fiat currencies is actually getting extremely serious. It's spreading. This isn't something that's being contained at all.
Read.
And I think the other thing that's fascinating is, Frank Venerosa did a lot of research in terms of gold leasing and what happened to the gold, and he concluded by 2002, I think he made a speech in Lima where he said that between 10 and 16,000 tons of central bank, and that's a third to a half of recorded central bank, was out on lease and had been sold into the market and wouldn't return. Now, since then, what central banks like the Bank of England and presumably the New York Fed have been doing is they've been saying, okay, you want to lease gold, that's absolutely fine, but leave it in the vault and we'll give you a piece of paper, or you can get confirmation from the vault that you own this gold over the duration of the lease. And so instead of it going out into the market and disappearing forever, it's if you like, double counted.
Yes.
At least two owners for a lot of it in the vaults of the Bank of England, the Bank of International Settlements, or wherever they put it, and also the New York Fed, and also possibly also Paris. So this is actually a serious problem. Now, with this recent move of gold being flooding into the COMEX warehouses, been a huge great queue to withdraw gold from the Bank of England. And you look at this and you think, hold on, this is a lot of this has got to be leased gold. So, we've got, if you like, a repeat of what was happening before 2002. This gold has gone into the market and it's disappearing because, it's not going back into the Bank of England, I can assure you. It's not just doing a trip for fun. So,
Not on holiday.
no, exactly. So put yourself in the shoes of a central bank, having defrayed the costs of the Bank of England or the Fed, New York Fed, looking after your bullion by leasing it, and now you sort of think, well, it's gone. I think we better stop leasing. So what you're going to now get, I think, is you're going to get a restriction on supplies because the leasing that has been providing the liquidity in the bullion markets is about to cease.
No.
I think it probably is ceasing now, and I think this is probably one of the drivers behind a rising gold price today.
Yeah, well, let's talk about that because, gold, I hear it at conferences. I hear it when I talk to clients. They're all telling me gold is too expensive. Of course, they told me that at $2,000 an ounce, and I told them, you're crazy. The only people buying gold right now are central banks and Asian retail. The Western investors not really in this yet.
That's right.
And at $3,000 an ounce, I don't think the story has changed all that much. So where do we go from here, 3,000 plus gold, in your opinion?
Yeah, well, I mean, the answer to this, Rich, is that it's not gold going up. It's actually
True.
paper currencies going down. I think that's the thing that needs to be grasped. I mean, the problem we have is that anybody going into the market and considering buying gold is looking at it as an investor. No, that's the wrong way to look at it. The way you look at it is you've got to ask yourself the question. Here we are at the top of a credit bubble. The credit is basically where the risk is. How do I offset that risk? How do I escape that risk and protect my wealth? Well, the answer is you get into real money because the purchasing power of gold, yeah, it does vary, but it doesn't vary that much. It's relatively stable and has been over a millennia. So, that is the safe haven. That's what it is. And if you look at the price and you think the price is too high, you're looking at the wrong damn thing. You should be asking yourself, is the dollar too low? Do I see the dollar recovering? Do I see a future for the dollar? Do I see inflation going away? And do I see deflation, purchasing power of the dollar rising, or however you like to put it? I mean,
Not without
that's
a
the
balanced
question you've got
budget.
to ask.
Yeah, not without a balanced budget. I think it all starts there. And I've asked a lot of people over the years. It's hard to do because everything is priced in dollars, right, or some other fiat, and it's just a terrible measuring stick. Your measuring stick has to be a constant. If it's not a constant, it's no good. And if people would just do the exercise of measuring everything of value in gold, they
Yeah.
get a whole they get a much clearer picture of where everything is. If you measured an egg in gold, a college education, a home, a stock, everything in gold versus dollars, you get a true representation of where value is.
Absolutely, absolutely. And our mutual friend James Turk ran a chart of the price of oil in gold. This is a famous one. He's put in books and published on his website and so on. Pricing oil in gold and pricing oil in dollars, euros, sterling, whatever. And, that tells you two things. Priced in gold, I mean, there's very little variation. And if you actually look at the underlying numbers, I think the most that it's ever been is something like, the price of oil measured in gold has gone up 2.5 times, or it's gone down to 50%, if you like, of the gold price back in 1950. So when you look at it in dollars, it's gone, sorry, it's gone from something like, what was it, between $2 and $3 up to $140 and back down. And I mean, so not only has the price of oil rocketed in fiat currencies, which is a reflection of the falling value of these fiat currencies, but also it's been incredibly volatile. And the point is that, while, you'd think the businesses actually like the idea that, I can borrow some currency today, and when I repay it in 10 years' time, it's in real terms, it's going to be considerably less. But the volatility of it actually makes business planning extremely uncertain.
Mm.
It is far better, rather than robbing savers, which is essentially what devaluation of a fiat currency does. It's far better that everybody has a degree of certainty in terms of what the hell they're dealing with in terms of value. I mean, if you look at the progress that Britain made, and also America, actually, in the 19th century, I mean, it's just really remarkable, really remarkable. The interesting thing is that I think that progress is now something which potentially is in the BRICS, the whole of the sort of China, Russia, Shanghai Cooperation Organization bit, all that side.
Yep.
If they're going to maximize that, then they're going to have to stabilize their currencies. Coming back to your point about, how about China's debt and all the rest of it? They're going to have to go on gold standards. Russia can do it tomorrow. Thanks to the new sort of glasnost, if you like, between Russia and the Trump administration, that is obviously not going to happen because it would, it just upset the apple cart.
Yeah.
But China, I think, has taken the view, look, we're not going to force the pace on this. We will introduce a gold standard or protect our currency, if you like, from a fallout in Western currencies. So in other words, they're going to take a defensive position.
Yep.
That's always the way they play it.
Yeah.
India is beginning to accumulate gold as well, but it takes the view because it's sitting on the fence. It's got obviously a lot of Asian trade, but still doing an awful lot of trade with the Western advanced economies.
Yeah.
So it sits on the fence on this one. And also the other thing is that they've been thoroughly Keynesian in their approach. Why?
Yeah.
Because we basically in the Bank of England basically appoints the governor of the Reserve Bank of India. So you can see that our influence is. And all our bad habits are being translated into.
Yeah, unfortunately, they spread. So
yeah.
We just have a little bit of time. I want to kind of leave with your thoughts. So if you're reaching out to our listeners, our readers, our investors, what's the one thing you would like to leave them with, if you could leave them with anything?
Get the hell out of credit.
Amen. And to do that, how do you do that? I think we know from the previous.
Well, I mean, basically, you've got two options: gold or silver. Silver is the more speculative one. I mean, the idea that silver isn't being priced as a monetary metal.
Agreed.
The moneyness isn't really in there.
Certainly not yet. I think that'll come late stage. I think that'll come late stage bull market.
Yeah, I think so. I mean, I think to go down the silver route, you're really looking at it as a commodity.
Yep.
And I think it's actually a commodity of enormous potential. I mean, I think it's horribly undervalued, particularly with so much of the world sort of trying to decarbonize, trying to put in photovoltaic cells, and you've also got all the electronic and defense applications of silver, which make it a really important strategic metal. And I think to have a gold-silver ratio of 90 is plainly ridiculous.
It just reflects
So
central banks are doing the buying and not investors just yet. So
yeah, absolutely. And I mean, there's been if you like, a shortage of supply relative to demand, according to the Silver Institute, for, well, certainly the last 4 years. And if you take out the variations of ETF holdings, you're looking at 7 years. So yeah, that doesn't go on forever. And I mean, I just note that in the last 2 days, silver's performance is suddenly looking very, very interesting. It's looking like what we in the trade call a bear squeeze. In other words, the guys who are short of this, paper short, whatever, it doesn't really matter. It's basically paper shorts. They're going to have to cover their positions, and they're getting a bit scared of what might be happening to those positions.
good. It's about time,
Panic,
right?
and the one thing a bull likes to see is a panic amongst the bears, and I think that's probably it feels quite likely. Feels very, very likely.
Fantastic. Well, Alasdair, thank you so much for taking the time to be with us. If our listeners want to hear more from you, how do they get a hold of you? How do they get subscribed to your Substack?
Well, I run a Substack channel, which is alasdairmacleod.substack.com. But if you Google MacleodFinance, that'll probably take you there. Then you won't have to get round the horrible spelling of my Scottish name.
It's not that difficult. So I've got it here, and we'll put it up on the screen too. But it's Alasdair, Alasdair
IR,
Macleod,
Cloud, MAC,
Macleod
correct.
substack.com. That's how you get a hold
That's
of
it.
Alasdair. And as always, we hope that you subscribe to our YouTube channel, that you like it, send us your comments and questions. And I just want to say a big thank you, Alasdair, for taking the time out of your day and sharing your insights with our listeners. Thank you.
Rich, that's very much my pleasure. Lovely talking to you again.
As always, thank you.
Thanks.